Hi, my name is Russ McCullough. I'm the Wayne Angell Chair of Economics here at Ottawa University. And I just wanted to talk to you about the course a little bit and give you a big overview of what you're getting into here with money and banking. Money and banking is just an awesome topic. There's so many things that go into money, both emotions and quantitative reasoning. And that's part of what makes it a fun topic. And so at a very individual level, when we think of money, we're usually thinking of budgeting and the inflow and outflow of cash. And for this class, we're going to talk about where it comes from, why it's useful, and how that helps make the world go round. So I wanted to mention that Ottawa University has kind of a special connection with the Federal Reserve, and that Wayne Angell was a graduate from here, and that was back in the 50s, and then he came back here, was a professor for a long period of time, and then in 1985 he got appointed to the Federal Reserve Board of Governors. And what we're going to learn in this class is that there's about 7 human beings that control the supply of money, and he was one of them. So that's kind of a neat connection for us here at Ottawa. So I want to give you kind of an overview of the major components that the class is going to have. We're going to start off at a more micro level, thinking about individuals and their potential to purchase financial instruments of stocks and bonds. We'll spend quite a bit more time, I guess, on bonds and the time value of money, which should be hopefully a review from some previous classes that you've had. But nonetheless, we'll give it a good, thorough treatment, so don't be afraid yet on that. So a bond is an IOU from a company or a government. So for instance, when the United States government wants to buy some weapons of mass destruction and they don't have the money to do it through taxes, they can sell government bonds. And those have a value at the time they're purchased, and there's an effective interest rate. And so we'll get into the details of the financial markets in this class and the calculation of the value of those financial instruments. Then we're going to take a little step up and get into different types of financial institutions and the inner workings of those. So banks especially, but there's other sorts of institutions that play a major role in the banking systems, like insurance companies, for instance. In places like investment brokerages like Goldman Sachs. So we'll take a look at the structure of the banking system as well as the interworking of the banks. And then we'll take another step up from there to look at our central bank, the Federal Reserve in the United States, and we'll explore some global issues with the Federal Reserve and how other countries work with the Federal Reserve as well in different types of currencies. So the euro, for instance, and the yuan in China. There's major currencies that have a marketplace, and we'll think about those in how they fit in. We'll really hit that harder in the next class, which some of you might not be taking. Investment finance is kind of a part 2 of this class, and we'll get more into the foreign exchange market in that class, building on what you had already gotten into in principles of macroeconomics. So the money supply process, the fractional reserve banking system, when you go make a deposit of $10 at your local bank, they are required to hold back some of that, and they can loan out the rest of it. So one of the eye-opening things that people find in money and banking is that the bank doesn't hold all their money. If we all came to the bank at one time, they wouldn't have it because it went out in the form of car loans and home loans and other sorts of loans. So the bank is in the business of making money itself, and it does that on the spread. So that's why your deposit rates aren't so hot, especially the last 3 to 4 years. You have experienced some pretty low rates, and as you know, the rates to borrow are much higher. So that's the game that banks are playing with profits, and the role of government is to manage and regulate that system. And it's been overly more and more involved with that and the pendulum kind of swings back and forth. And so after the financial crisis here in 2008, we've seen the pendulum swing to the regulation side. And so we'll discuss some of those issues in this class. And then lastly, we look at the more aggregate level of money and banking and its influence on aggregate demand and aggregate supply, which are some things that will be review from what you had in macroeconomics. So we'll have our, one of the models we'll look at is aggregate demand and aggregate supply in the short run and the long run, and we'll kind of develop some theoretical frameworks to make some predictions. One of those that we pay attention to, especially in this class, is the price level. But of course, real GDP is an important one as well, due to the dual mandate that the Federal Reserve has in looking at not only inflation issues, changes in the price level, but also unemployment and some of the struggles that they face from a policy standpoint to try to balance that. In fact, some economists will question whether they're better off backing off, and that they may create more uncertainty than it's worth, and how much stabilization do they actually bring to the table when we don't know exactly what they're up to, because there's this mysterious veil that the Federal Reserve has been accused of operating behind. And so some people call for more transparency, and other people advocate the independency of the Fed. And so that's, again, one of the fun issues that we'll look at. And that's kind of a quick overview of the course of the major components. We got the individual stuff, individual bonds, and the financial instruments that we, even as individuals, might use. And then we'll get down into the banking system, and then where banks operate. And then we'll get into the Federal Reserve, the branch of the government that handles our monetary affairs, and then we'll see how that fits into the aggregate economy. So hope this gave you a little fun interjection of and hopefully inspiration to charge forward. There's lots of material to learn, so hit it hard, hit it early, and good luck. Thanks.